Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Wednesday, January 7th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So looking at the precious metals overnight in the broader macro markets, precious metals, they are under pressure. We've got gold declining as traders are looking past some of the heightened geopolitical tensions and are looking at some of the U.S. economic data that is scheduled to be released this week. Having risen more than 4% over the past 3 trading sessions, President Trump said that Venezuela would hand over as much as 50 million barrels of oil to the U.S., while the White House refused any type of military action to acquire Greenland. That's where you get a lot of volatility back and forth, and that oil coming into the U.S. has put pressure on the oil market. Oil futures back down below that 57 mark on the February contract, and the farther out you go, the lower it gets. Looking at the precious metals markets, you do have February gold, $44.58 as of this recording, down about $37, capturing that 45 handle, going up to about 45.12, but not quite stretching up to those all-time highs. Bit of volatility in there, down about 0.8%. You got the silver futures having a wild ride at 78.78 last, down $2.28. High of the overnight session, 82.58. Low of the overnight session, 78.10, down about 2.7%. So while this geopolitical landscape really remains fragile, traders are really turning their attention to the busy lineup of U.S. economic data, including the December jobs data that's due out on Friday. So you look back at that silver market, you got about a $4.48 average true range, and already on Wednesday, as of this morning here, we've seen about a 5% range here between the intraday high and the low on the precious metals, and this is becoming kind of a regular part of the session. So technically, on the bull side, you want to see that close over 82.67 on rising volume, and then the next session open up and be able to hold some of those gains. Now, what we've seen here is that the overnight session opens when Asia gets going, and then what happens, the market blasts off, the profit takers come in, and the market gets slammed. So that's why when those types of market conditions take place here, generally what I do is I bust out the old egg timer, go over to the oven, put on the 1 hour timer on there, and then I come back and reassess it an hour later and see if some of that volatility and some of that emotional trading has come out of the market. Because if you go back towards the end of the year, what did we see? We saw that Friday close up $7. A lot of people chasing it in a very thinly traded market. Sunday market gaps open on a lot of propaganda saying there's a supply squeeze. Market gaps higher, and then what happens? Monday, you get some volume coming in, and the market gets slammed down, and the market didn't even hold that gain there for much more than an hour here. So a lot of times you got to be patient. Remember, you really want to be cool as ice on this thing. You want to have your emotions aside, just execute accordingly here, according to what your signaling process has. So looking at those macro markets on the equities, bit of a mixed picture here. You got the S&P 500 down just ever so slightly, the NASDAQ down about 50 points, the Dow up 33, hitting a record high yesterday. Russell 2000, we've been all over that over the last quarter, sitting at 25.96, fangs under just a touch of pressure here. So stocks, they are stalling after the start of the strong year with some geopolitical strains really dampening the mood here. You had 3 big days of data kicking off here. You got the JOLTS data, you got the job openings, you got the ADP, you also got the unemployment rate coming out here a little bit later today. So again, S&P down about 0.1%, NASDAQ down about 0.2%. The NASDAQ and the S&P here just right in that record territory with the S&P 500 hitting a record. Now the oil fell after Trump said that Venezuela would turn over as many 50 million barrels of crude oil to the U.S. Where this oil will be sold out to, there remains any question here where that money probably going to flow back into Venezuela here, maybe compensate some of these oil producers. You know, I saw a lot of speculation about Chevron because of their close ties with Venezuela as far as having infrastructure there, potentially being one of these targeted companies, something like Intel, where it becomes nationalized by the U.S. Don't hold me to it, just some of the speculation, some of the discussions that I've seen out there and heard from other associates of mine. So looking at rate cut expectations, no real change overnight here. And then you look at the S&P 500, some of the strategy, the S&P 500 Q4 earnings are likely to beat the consensus by about 5.5% above that historical average. That's according to Deutsche Bank there. You look at the earnings, we're going to have Albertsons are scheduled to report. results just before the market opens here. Then you get earnings from Jeffries and Costco, December sales that are due out later today. You look at some of the economic data here. Well, ADP jobs data for December is expected at 7:15 a.m. Central Time. That could be a bit of a mover and shaker here, as we did go into that blackout period where we were not getting any kind of government data. And one of the shifts was looking at that ADP data, looking at the weekly ADP data. We'll follow that by some ISM services and the JOLTS data for November and factory orders for October. The ISM services likely deteriorated in December, and that's according to Bloomberg economic analysts here. So you look at the CME's Fed Watch tool for that January 28th meeting. No real change there, 16% likelihood they'll cut rates. You go to the March meeting, 42%. As far as central bank talkers here, you're going to have Fed's Bowman. She's going to be speaking on bank supervision and regulation here. That's going to be closer to the end of the trading session at 3:10 p.m. Then you look at the FX markets here, where there's been not a lot of volatility in the FX currencies here. And oftentimes you start to get some big moves with the dollar index has been creeping up, getting closer to the resistance at 98.42. Market trading last at 98.32. You go to the euro currency for March, sitting at 117.25. Little bit of weakness there, coming close to that critical support at 117.09. You'll get 10-year treasury yields really range bound recently between this like 4.15 and 4.2%. But the bigger range here is 411 to 422, or a breakout 425, 4.25 could put some pressure on the markets as people go, whoa, these rates are getting a little bit too high. And that breakdown below 4% really puts the afterburners on the risk on market. So we want to pay attention to the steepening and the flattening of the yield curve. Now you look at the VIX for the January futures, 1635. So no real action there here. But what you want to watch as far as if you're a bear on the stock market and if you are a bull on the volatility index, is you want to watch that Supreme Court ruling on tariffs and then those geopolitical risks potentially rising. So that Supreme Court ruling on tariffs could be around Friday here. So we'll see. Maybe some trimming will take place on the U.S. equity markets. Maybe some hedging will take place here. You look at Bitcoin futures. Bitcoin really sadly kind of giving up some of its gains yesterday here after running into some small resistance point. We want to keep an eye on a couple of the critical levels here. So for the February contract, that critical level is about 95,130, which could potentially open up a break to that path back to 100,000. Futures are sitting right around on the January contract, 92,245. You wanted to see a break above about 94,500 to get that momentum going here and some of that trend reversal take place. Now, as far as the S&P, the gamma exposure, the dealers, they've shifted more towards a positive gamma here, indicating some conditions of lower volatility. So what happens when the market rises? They got to sell some futures. And then what happens when the market dips? They got to buy some futures here. And that's where that volatility tends to compress here. But we've seen some unexpected movements here, I should say, recently. Now you go to Europe and Asia here. Well, those European stocks, well, they were muted here after 3 straight days of gains. And you go to the Asian trading, Asian equities, they did decline after those escalating tensions between China and Japan. They dampened some of that investor sentiment following the recent rally. Asian also trade tensions, I think, not necessarily trade tensions, but tensions in general are kind of growing between China, the U.S. There's some, concerns about Cuba, also Taiwan, China, Russia. So geopolitical risks are rising, and unfortunately, it's surrounding some of this oil market and increasing the supply of the oil market. So oil's not seeing the action there, and I think that's where we got part of that rally in that gold market the other day, especially when Switzerland came out and they had seized many of the assets here for President Maduro. And what that does is it reaffirms what we saw in 2022 with the Russia or Ukraine invasion, where Europe and other countries had seized those Russian assets. Well, if those assets are stored in other places where you have other countries storing their assets or political leaders here getting that frozen, what happens is the people, they prefer to own these hard assets here. They prefer to own things like gold, like Bitcoin, like things like that, just to keep it off the radar here and make it easily liquid. So looking at the Asian trading, again, MSCI Asia Pacific Index dropping about 0.7%, snapping that 4-day winning streak. So that could be why we do have some weakness in the U.S. equity markets as well. Now we look at the ETF flows because these have been very important for the precious metals. The ETFs, they were buying gold, platinum, and palladium, and they continue to sell on the silver market. So it seems like markets kind of push up, They're sellers in the market. Markets come down. They're buyers in the market. And this is where we get this ping pong action. If you look at the silver market over the last several trading sessions, since we got this breakout, it's been back and forth like this, and you get a level of volatility in there. As the algos come into the market, also you're going to have your people playing the arb between the Asian market, the US market, the London market. So that's a totally different group of people out there. Then you get the small speculators coming in, you get the leverage players on there, and people wonder how 80 million ounces or whatever could be sold in a second. Trust me, I could click a button, and I could click a lot of buttons over here and get things rocking and rolling in that metals market, especially on the futures side. So looking at the precious metals flows, again, buying gold, platinum, palladium, selling silver. Year-to-date percentage change, no action in the gold. Still too early here. They added about 61,000 troy ounces in that previous trading session here. Total gold by ETFs sitting at about 98.9 million ounces here. Gold up about 4.1% this year. Tacked on about 1% yesterday, declining about 0.9% here yesterday. Silver, you look at the sell-off here yesterday as far as ETFs, not futures prices, ETFs down about 0.4%, and year-to-date taking off just about 0.8%. So they cut about 3.2 million ounces, and that's where I tell you is that as this market shoots up, we're seeing some selling action going there as traders are trimming some positions. So looking at this was the third straight day of declines on ETF flows, and the gold-silver ratio, interesting, not actionable, 56-1. So we'll see. Hey, maybe it goes down to 45-1, and people are like, whoa, silver's way too stretched in comparison to the gold market. We're going to need to unwind that. So who knows? But I'm just telling you that some of these things are really interesting to watch. Are they actionable or not? Things like 50 million barrels of oil coming into the U.S. here is potentially going to increase supply. Oil prices go down. You hear that kind of headline, much more actionable, in my opinion, than something like looking at, gold-silver ratio hitting this or other things that I've heard out there. But we'll keep an eye on things here. Natural gas snapping back a little bit. Not a call that it's a bottom or anything. We've got record natural gas production here. We've got a mild winter so far. We've got no signs of any kind of polar vortex in the cards here, although I will be traveling back to Chicago. So next week, it'll probably timely hit a polar vortex then. So you guys got any questions, give me a call, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.